But that too is seeing some recovery from the lows of the day. But staying with the banking space after that slew of earnings that came out on Saturday, almost double digits, Gaurav is joining in to summarize most of them for us, if not all. Gaurav, tell us more.
Well, yes, when we talk about banking, it was very crucial weekend, I would say, because there were many names which came with their earnings. But let's look at some of the key counters who are actually also reacting on the back of the earnings. First, let's talk about HDFC Bank. A very good set of numbers is what we saw. Profitability increased almost by 12% on a year-on-year basis. Now, there are a few key things to remember here. First is that the asset quality remains stable, and second is that the core net interest margins declined only by 11 basis points. This is something that the market has taken positively, and as a result, we are seeing some uptick in this counter. When it comes to ICICI Bank, now there also let's focus on the core key segments where the positivity was driven, and that is the reason why we are seeing some uptick in the stock price as well. First is that net interest margins that declined only by 7 basis points versus expectations of 18 basis points, and here also we saw stable asset quality. When it comes to Yes Bank, there also we saw a little bit of positive news coming in, and the reason being that bank is actually moving towards their target of 1% ROA. They actually improved their ROA almost by 10 basis points to 0.8%, although it was driven largely because of the other income for the bank. When it comes to Bandhan Bank, now we saw a little bit of weakness in the stock price as well today, and the reason being that when it comes to numbers, they were expected to decline, and they have declined a little lower than what the street was expecting. But on the other hand, there were some concerns on the asset quality. Now, the slippages have actually remained high, and specifically when it comes to EEB segment, which is some of it is actually their MFI book. There we saw higher slippages, and that is the reason why when we talk about the stock price, we are seeing some negative reaction. RBL Bank, on the other hand, again, when it comes to net interest margins, they delivered fairly well, but it was actually lower than what the street is expecting. Other than that, there were also some other areas of concern where the bank actually did well. In fact, what they are saying is that in FY26, they believe that ROAs are going to be somewhere around 1%, but definitely on the back of the net interest margin fall that we saw in the quarter, we are seeing a negative reaction. AU Small Finance Bank, let's move on to this counter now. It has seen a fall of more than 5%, and the reason being that they have increased their credit cost guidance almost by 10 to 15 basis points. They expect credit cost to remain around 1%, and after that, we saw some sluggishness from the investors and as well as brokerages like Investec. They have cut their target price to 910 rupees because they believe that this will actually slow down their journey going ahead. Lastly, let's also focus on Union Bank. Now, we already knew that the numbers for Union Bank was low when we compare it with the market. But another key trigger here is that now brokerages believe that there are no near-term triggers for the stock. In fact, when we talk about valuation, at the same valuation, we are getting better banks as per brokerages. And that is the reason when we talk about Motilal Oswal, they actually cut their rating for the stock. And as a result, we are also seeing some kind of negative reaction in the stock price. So to sum it up, some good banks like HDFC and ICICI Bank who maintain their outperform across the segment, but there were some weaknesses like AU Small Finance Bank where we are still seeing some stress coming up from the MFI segment.
Well, thanks so much for that. Some hits, some misses from the banking space, but let's